What's going on, everyone? Welcome into today's video. Today I'm going to be talking about how to run price projections on stocks that you own. Try to figure out where they're going to go over the long term. I've had a lot of requests on this recently, and I've kind of been slacking a little bit with the videos that I've been making for the community. So I'm trying to get back to that. I'm also trying to do some more portfolio reviews. As you guys saw, I posted another one yesterday. I'm going to do another one today after this video. So basically what I'm going to do is run you through my whole process on how I actually run price projections on companies that I own to try to figure out what's a good entry for me based on how much I want to receive in terms of a compounded annual growth rate for the stock price, and kind of figure out where the stock price is going to go over a long period of time if X, Y, and Z happen. And I have this stock price projection tool called Summit Intelligence that, we're still working on getting this tool out to you guys. It's been a pain. I've been talking to some people to try to figure out, the best ways to go about this. Obviously I have a lot on my plate with school, hockey, work, and then just trying to pump out stock content for you guys. So I'm trying to outsource this at the moment. So that's a work in progress, but you can still do something similar, on Excel, which I'll talk a little bit about in a little bit. But yeah, so let's get right into it. So today I'm going to be using Meta as a stock that we're going to run some price projections on. Now, before I get into this, you have to understand the company. You have to understand where the company's at right now. You have to understand the fundamentals. You have to listen to the conference calls, understand what is expected to come in the future, what is management saying about the business and where the business is going to go over the next 3 to 5 years. You can't just make an Excel sheet where you can calculate net income margins from revenue and net income. You can calculate PE ratio, EPS, and figure out where the stock price is going to go over the next 5 years based on a couple of numbers you throw in. Like, these actually have to be detailed. These have to be numbers that you're not just pulling these numbers out of your ass. You're looking at analyst expectations, you're looking at management guidance, you're looking at what's realistic over the long term. When you're running projections, you want them to be conservative, right? You don't want to run projections on the high side. Say I run a base case for Meta and the numbers are very conservative. Like, say I expect 20% revenue growth over the next 5 years, and I throw in 14% revenue growth, and I do the same thing for net income and PE ratios, and I do them on a conservative level lower than what I actually expect to happen as like a base case, and it still returns me 15-20% compound annual growth rate. Like, that's very attractive. What you don't want to do is overestimate your projections, because it's going to look better. It's going to cause you to probably put more money in than what you would if you were conservative about it, and then you may be let down. You may be not taking all of the risk into account. Like, if I really think Meta is going to do 20% revenue growth, compound annual growth rate over the next 5 years, I'll probably put that number at like 17%, 15%, just to be on the low side and be conservative. Because if I put that 15% number and I do the same thing for the rest of the inputs on the tool, and it still gives me a good compound annual growth rate, then that means it's very attractive. Because even if they do less than what I'm expecting the company to do after I've done my research and understand the business, even if they do less than what I'm expecting them to do, I'm still going to make a solid return on my investment. And then if they do what I expect, that will be more so my bull case. Then there's a lot of money to be made. Either way, there's money to be made. There's going to be stocks that you pick that don't do very well. That's just, at the end of the day, that's the cost of doing business. Like, a lot of people are, Duolingo is one of the ones that's going around right now. I bought into Duolingo. So did Nick, right? We're both down 35-40% on our positions. I mean, for me, Duolingo was at the highest, like two something percent of my portfolio. So I don't really feel it. Like, my portfolio is still near all-time highs. Obviously that wasn't the best investment I've ever had in my investing career. I've had a lot of winners. But there are going to be times where you invest money into a stock and it doesn't work out. That's the cost of doing business. There's nothing guaranteed in investing into the stock market. You're investing into individual companies. There are companies that go bankrupt all the time. And there are stocks that, drop and they never recover. So at the end of the day, like, you just have to, I forget who, somebody's got a quote, some famous investor, I forget exactly who it is. But he says, if 6 out of your 10 stock picks are good, you will make a lot of money over the long term, right? We're not trying to go 10 for 10. If we go 10 for 10, that is fantastic, right? Like, that's just, there's definitely some luck in there, but it's still, very solid. But you can't expect to go 10 for 10. My goal is more like 7, 8 out of 10. Try to set my sights a little high. Obviously 10 out of 10, like I said, I would love to go 10 out of 10 on my stock picks, but you have to be realistic with yourself. And even if you go 7 out of 10, you're still going to make a lot of money over the long term. So with that being said, let's get into it. So I'll also show you guys a little bit more about the tool and kind of what we're working with right now. So as of right now, you have to input all of these metrics, which I'm on stock analysis here for. So I'll just search up the ticker Meta. Ticker is Meta. Current share price is 608.97. Market cap is 1.53 trillion. So that's million, billion, 1.53 trillion. And shares outstanding is 2.52 billion. That is million, billion. There we go. All right, start dashboard. Okay. So we've got year 1 revenue, net income, PE low and high. These will spit out. So this will spit out net income margin. So you would just do net income divided by revenue, which would give your net income margin. So if you have $1,000 of net revenue and $100 of net income, meaning every $100 you make in sales, or every $1,000 you make in sales, $100 actually goes down to the bottom line after all of your taxes, your expenses, your interests. Like that's straight to the bottom line in cash after all of the all of the things that you had to spend on to make that revenue. That would give you a 10% net income margin. And then we would have the EPS here, which is the net income divided by the shares outstanding, which is what we already inputted into the tool. And then the PE ratio is different per company, per industry. So you have to look at historical ranges of the PE. Obviously, the market is forward thinking, but the historical ranges they do matter. In terms of PE ratio, you have to look at competitors and where they're kind of sitting at right now. So, all right, let's get into it. So how do I find these numbers, right? Okay, so first of all, what I'm going to do is, if you guys don't have this app, it's amazing. If you're a student and you have a student email, you can get this for free. It's called Quarter, Quartr. I'm not affiliated with Quarter. I would like to be, honestly. I've been using their platform for 3 years now, and it is fantastic. So if you are, I'm not sure, even when I get out of school, I will 1000% pay for a Quarter membership. I don't know how much it is. Even if it's $50 a month, I will definitely pay for it. It is super valuable. Basically, it has every single company that's public on here. And you have all of the data, key slides from past, like most recent earnings. You can listen to the earnings calls. You can look at the transcripts, the slides, the report, and then there's like an AI chatbot feature as well. So we're going to go to the latest event, and we're going to go to the chatbot, and I'm going to say, list me the revenue numbers for Q1, 2, and 3 of 2025. There's other sources you can use. Like I could also go to Qualitrim. What I honestly like to do is use multiple sources and kind of double check that the numbers are all the same, just to make sure that I'm actually like getting proper data. So for Q1, 2, and 3, we've got 42.31 billion for Q1, 47.52 billion for Q2 and 51.24 billion for Q3, and these numbers are the same: 42.3, 47, 51. Yeah, so Qualtrim's on it. So we have the first 3 quarters. Now, year 1 is full year 2025. So Q4 hasn't been released yet. I think early February, Meta has their earnings. Late January or early February. So, you know, a couple weeks from now, we'll be able to get the exact full year 2025 earnings. So from here, we can ask, did management guide for Q4 revenue, Q4 2025 revenue? So if they did, perfect, because then they're kind of giving you a range of where they think revenue is going to go. If not, you can look at okay, so there we go, 56 to 59 billion for Q4. So if they don't guide revenue or even net income, then you can look at like analyst expectations. So you could go to Google AI. I like this as well. Let's go Q4 2025. Oh, that's Q2. Q4 2025 Meta revenue guidance / expectations. Now these are price projections, right? These aren't, you know, you're never going to be, I mean, you can be spot on, but you're not going to be spot on, right? You're trying to make educated guesses, essentially. Like you're taking in all of the information that you know about the company. You're taking in what management said, what analysts expect, and then kind of projecting a base case of what you think the stock price could look like in the future, and then determining if right now is actually a good time to buy the stock or not, depending on what you think is going to happen. Okay, so let's see. So this says Meta guided 56 to 59 billion, same as what quarter said. 21% year-over-year growth, which is very solid for a company with a 21 PE ratio. Wall Street expects 58.33 billion, trending toward the high end of Meta's guidance. They estimate EPS of $8.16 to $8.21 for EPS. Total expenses, CapEx. Okay, so we're 56 to 59 million. Usually what I'll do is just go right in the middle. So that'd be 57.5 billion. So now what we're going to do is, okay, so Q4 estimate in the middle range for Meta is 57.5 billion. Typically, they do beat. But like I said, you would rather be conservative than on the high end of what you actually think is going to happen. So let's go back here. Let me find these numbers. Okay, so 42.31 plus 47.516 plus 51.242, and then Q4 guidance in the middle is 57.5. So that gives us 198.568 billion. 198.568. That's million. That's billion. Now, this one's tough. This is why you have to understand the company and what's going on with the financials, the fundamentals, and the underlying business model, right? So in Q3, they got hit with a one-time $15.93 billion tax charge, and this was on the bottom line. So the net income got absolutely spanked. So without this one-time charge, net income would have been 18.64 billion. So this is the actual number that we're going to use for our chart here, because it was a one-time charge. Like it has nothing to do with the business model. This was just from the big beautiful bill. They're not going to have to pay this charge ever again. I mean, unless something else comes up. But as of right now, this was a one-time charge. So that's how we're gonna play it in our projections. So we'll go back to quarter and say, give me Q1, 2, and 3 we have three. Q1 to net income 2025. And the reason I really like quarter, like, it's hard to trust some AIs when you're doing stock research. Like, I double check typically either way. But in terms of quarter, like, they are pulling this information directly from the income statement here. Like, they pull it directly from all of the financial reports, all of the slides, even transcript. Like, I could ask for a quote that Zuckerberg said about, all of this spending and what's the worst case scenario, and it'll pull me 3 different quotes that Zuckerberg said regarding this topic, and there will be like links like this, 1, 2, and I'll hit it and it'll pull me exactly to where Zuckerberg said this in the transcript. So that's why I really love Quarter. Like, it's hard to trust, ChatGPT and Gemini and all those things. Like, you really have to double, triple check all the information it gives you when it comes to stock information, company information. But Quarter is really, really solid. Okay, so for Q1, we've got 16.64 billion. I'm getting a call from TD Bank. We don't want to talk to them. 18.34 billion in Q2. Net income would have been 18.64 billion in Q3. Now let's see if they guided. They probably didn't, but typically companies guide, revenue, not net income. So let's see net income expectations guidance for Meta Q4 2025. Let's see here. Okay, so it gives us, they did say EPS. Oh, they did not issue a specific net income EPS forecast, but then this says they did, I think, up here. Did it not say that? Maybe that was Google AI. Okay, so it gives us the EPS, and based on the share count. Okay, so it says 20 to 21.2 billion. Okay, so we'll just go, we'll do rate smack dab in the middle. Oh shoot. What was the Q3? 18.64 plus, we'll just go with 20.9. 20.9. Pretty much in the middle. 74.52 billion. So this gives us net income margin. Let's see if they have full year EPS guidance. Let's see how close we are. This gives a net income margin of 37.5% as of right now. Profit margin is 30, but that would take into account this this one-time charge here. If not, it would have been right about here. So that kind of makes sense. Let's see what it's saying. Expected $29.40. So we're pretty damn close. Okay, so that's cool. We'll stick with that for now. And then PE, what's their current PE right now? I think it's like 21. Well, minus the one-time tax charge, it's closer to 21. So we'll, like, in terms of figuring out this number, it depends. Like I said, it depends on the company, the industry. There's some companies that they trade at higher valuations, like Microsoft and Apple. Like, they're gonna trade at higher valuations, just because they're such beasts of companies. Let's look at the 5-year. So typically, right now we're 26, 29, dropped all the way down to 20. But we get a high to 35. This is the past 5 years. About 10 years, even 10 years, it was higher. I believe they had higher growth rates back in these days. For sure they did. And then we fell off a cliff in 2022. This was the time to buy Meta, guys. Should have been buying with me. All right, so last 5 years, we got a high of like 38, low of like 20. So we'll call it, we'll go 22 to 28. So this puts the stock price on the low end as of today. Like this is like fair value. On the low end of 650 and on the high end of 828. The stock price right now is like $609. So this is why I truly think Meta is a great buy today. Now let's talk about. So we have all of our fundamentals down. We've got our full year revenue number, which we can update once they come out with earnings with what they actually came out with. Full year net income. We have our net income margin. We have our EPS. We have our PE ratio on the low end and on the high end. And this gives us a share price on the low end and on the high end. So right now we're currently we're below our share price on the low end, which is pretty cool. So the PE ratio multiplied by EPS gives us these share prices here. So 22 times 29.57, and 28 times 29.57 gives us these low and high numbers. Okay, let's talk revenue growth. So let's do year-over-year revenue growth for the past, let's call it 8 quarters. Give me a compounded growth rate as well, yearly. We'll also look at Qualitrim. So if you don't have Qualitrim, you could also use ProfitViz. This one's free. It's pretty cool as well. I like Qualitrim better. There's a lot more things that I could do within Qualitrim, but this one, like I said, it's free. So you can still look at, revenue, and there's still, there's some things that you could get if you paid for the upgrade. But you can still, look at some charts, and it's not a bad option if you don't want to pay currently. So let's go to revenue growth. 1 year is 21.27%, which I don't think that's correct. I think last year or as of Q3, they were up like 25%, 26%. 2 year CAGR of 22%, 5 year of 19%, 10 year of 28%. So solid numbers. Let's see here. Okay, 22.8, 24, 27, 22, 18, 20, 16, 21. Oh, it doesn't have 22. What about Q3 2025? So over the last 2 years, 22.2%. This was 26%. So we've gone from, as of this year, we've gone from 16% to 21.5% to 26%. So we're clearly on an acceleration of revenue growth. I would love to see a 30% number this quarter. We will see. I'm not gonna, place any options bets on that happening, but that would be solid. Okay, so we're in an acceleration phase. We've clearly hit an inflection point here, and I truly believe that with the amount of money they're investing into computing power, Zuckerberg even said, I made a pretty big post about this in the Meta chat. If you want to scroll up, you can find it eventually. He basically said the money they invest into compute and if their goal is for super intelligence. If the money they invest into compute doesn't end up working, like worst case scenario, doesn't end up working out, super intelligence, they can't figure it out, they can still use that compute for their for their AI platforms within their advertising business to make, better recommendations. Essentially, what they've been doing, and Meta's been one of the biggest players to take AI and actually use it to become more and more profitable. So they're using AI and they're implementing it into their ads business to give better recommendations on ads for, you don't want to spend money on an ad to somebody who is not interested in this topic at all, right? So essentially they're making their the people who spend ad money on Meta, they're giving them a better ROI, making it more efficient. And in turn, so if I'm a business owner and I'm trying to run ads, I run ads on Meta and, it gives me a really solid ROI. I'm going to continue to run ads, and I'm probably going to spend 2 times more money on ads the next time I want to, put an ad out there because of the ROI I was getting. And that's kind of the flywheel that Meta's been, really starting to absolutely take off here. Like Q3 of 2023, they had 127 billion dollars of trailing 12-month revenue. 2 years later, we're at 190. Right? Like that's that's insane growth for such a massive base. Like $127 billion is a lot of money. And for them to grow 22% of compounding your growth rate over the last 2 years on $127 billion, like that is absolutely insane. So, Meta is really, I believe that their business has just become more and more and more efficient. And I really think the growth rates are going to, I think 20% is doable over the next 5 years. I'm not going to throw that into my calculator here. But then again, this all comes back to the fact that, I've been invested in Meta since 2022. I've been researching the company for a long time, keeping up with earnings and what's going on with the numbers and what Zuckerberg's saying and what the rest of the management team's saying. So I have a solid understanding of the business, of what's going on, what's going to happen in the future, what are numbers like, what are they going to do. If I didn't have all this information, then the numbers I'm putting up on the screen wouldn't really matter, because it's kind of just throwing darts at a dartboard, right? So let's just go 1 year is 26%. This is not true. As of Q3, it's 26%. 2 years, 22%. 5 years, 19%. 10 years, 28%. I truly believe that, we're at an inflection point in the business. I think over the next 5 years, we could get anywhere from 20 to 30% revenue growth. Like it's all on the chart. Like you can see right here, we kind of flattened out. They really started dialing in AI and AI spend like around these levels. And then we just started taking off like an absolute rocket ship. Meta's, most of their money comes from advertising, like pretty much all of it. Like 98% of their revenue comes from advertising. And that is just an AI data flywheel that is just getting better and better and better and better as more data comes into this flywheel and more time goes on. So, like I said, I want to be conservative with my numbers. So let's throw 18%. Even over the past 5 years, even with this kind of downtrend here, we were 19%. So we'll go 18% revenue growth over the next 5 years. Net income growth. Let's see. 1 year is 5%, which that number is pretty skewed. What would we be really? 55. I don't know the exact number. I don't know. It would be, let me see here. Year over year net income growth minus one-time tax charge. I know this video is kind of getting a little long. Probably already been like 30 minutes. But this is the research it takes, guys. Like you have to do the research. You can't just throw random numbers up here and just hope for the best. Like when I make these price projections, like this is truly what I believe is going to happen minus a margin of safety to be conservative. And I'm looking at real numbers. I'm looking at real expectations, real guidance, real quotes, real things that are going on within the business and the industry itself to try to really, the goal is to make the best prediction possible. Like you don't just want to randomly put some numbers in and hope for the best. Like I really want to make the best prediction I can in order to give myself the best understanding of, is this stock a buy right now or not? Okay, let's see. One-time tax charge of 11 billion. This says 13. Well, that doesn't make any sense. So this is giving me two different numbers here. Give me 1 sec, guys. Yeah, I'm pretty sure the one-time charge was more like 16 billion. So 74.46. 63.8% net income growth year over year minus the one-time tax charge. And when we look at this chart after they report Q4, it's going to be right back up to here for the next quarter. So 1 year is 63%, 2 years 40%, 5 years 19%. So again, we're clearly seeing such a inflection point with the overall business. Like you can see it in the numbers, right? 5 years 18%, 2 years 40, and 1 year 63. So as we kind of fell off here, we just started absolutely taking off like a rocket ship. During this time, there was a lot of expense issues, and Zuckerberg was spending. We had way too many employees. He was spending way too much money on, virtual reality and reality labs. I mean, they've been cutting that back. They've actually done a decent amount of cutbacks recently, but they had like way too many employees. They were spending a lot more money than they really needed to, because we were kind of going through a little bit of euphoria here during this moment. And they were getting ahead of themselves, essentially. So they had to cut back, and net income got hit. So, I mean, that's why these numbers look pretty bad. But as you can see, like, once they really cut costs and got more and more efficient, like when we were going through this time period, Zuckerberg's goal was efficiency. Like, he wants Meta to be a lean machine, cash flowing a shit ton of money, and just efficient growth, net income, money hitting the bottom line like it's nobody's business, and just laughing all the way to the bank. And as you can see, like we've done that. Like, we are absolutely taking off right now. So this one's kind of hard because the numbers are a little skewed from, the pullback in terms of the 5-year CAGR. 10-year CAGR is 35%, right? Like, that's, in 1 year, 65%. So we're going to go conservative. We're going to go 25%. So we'll do 25% net income growth over the next, so 2026, 2027, 2028, 2029. We've got revenue growth of 18%. So we've got some margin expansion here. By 2029, we'll have a 47.3. Let's dial it back a little bit. Let's go 23% net income growth, compound annual growth rate. So still have margin expansion, very solid. 37.5% as of 2025. Expanded that to 44.3% as of 2029. And again, I think these numbers are incredibly conservative for Meta. So now let's get down to the PE ratio, right? So typically, like PE ratios are maybe the hardest part, because, like I said, there's a lot of different factors to take in terms of PE ratio. We're gonna have multiple expansion, multiple compression. What is the industry usually looking like? What are the competitors really looking like in terms of PE ratios? But you also have to take into account, like, what I like to do is really compare it to the market. So I think as of last quarter, the market average revenue growth was like 7% and earnings growth was like 10%. So obviously we're much higher than the market, although we're trading at a very similar multiple than the market, right? So say net income and revenue are both growing 2 times faster than the market, you're definitely going to want to command a higher PE multiple than the overall market. I think right now, let's look at current S&P 500 PE and forward PE multiples. Come on. Trailing PE, wow, is 30. That's very high. Forward is 22 to 23. I didn't realize we were trading at 20 or 30. That's pretty. Our PE's up to 39.9. That's scary. That's a conversation for another day. All right. So we'll also need to look at historical averages of where Meta usually trades at. We already did that. Really, it was more so in the lowest we got in 2025 during tariff crash was 19.6. We got all the way to this. We're never going to see Meta at these levels again. I hardly hardly believe that'll ever happen again. We got up to 30, 37, 38 around here, and we've kind of been all over mid 20s, low 30s for the past while. So honestly, I think these numbers are fair. I think they're conservative. Like, Meta's not going to trade at a 22 PE ratio if it keeps growing revenue at 18% and net income at 23%, and margin expansion continues to, go through the roof. So I think it's very conservative to just stick with these numbers. So we'll do that on the low end, 28 on the high end. Bang. All right, so let me see if I can expand this a little bit. Oh, no way. What just happened? You gotta be kidding. Whoa, now Meta's up big. Okay, well, we were at, oh my god, I might have just screwed it. All right, well, this video was pretty long, and you guys get the gist of it. I'm not going to redo all the numbers. That took a while. I would have loved to screenshot those numbers. This is why I'm still working on the tool. We got a lot of kinks to fix here. Should just left it how it is. Essentially, so this isn't a meta video, but I put in conservative numbers, right? 18% revenue growth, 23% net income growth, 22 to 28 PE ratio for a company growing a lot faster than the overall market and trading in the same, if not on the low end of where the market trades at. And it gave us a compounded growth rate on the low end of 25%, on the high end of 32%. We also have, Meta has a very strong moat in the social media industry. They have, 3.55 billion daily active users. They own Instagram, Facebook, Messenger. They also got Threads that they don't even make any money off of Threads yet. They just started rolling out ads on WhatsApp, I think in July of last year. And WhatsApp has a boatload of daily active users, so that's going to be massive revenue growth. It's gonna help their revenue growth numbers a lot. I mean, net income growth as well, but yeah, I think Meta is very undervalued here. I think there's a very low risk profile in terms of Meta. Zuckerberg even said, if the compute that they're spending all this money on to achieve super intelligence doesn't pay off the way they think it will, they will still be able to use that compute for their AI advertising business, which is generating all of the money right now. So I think it's a solid play. I still can't believe that that just happened. I'm so sorry, guys. I would have loved to go over that and screenshot this and send it in the chat. I'll try to. I can do that after. I will send the thing in the chat. Give you guys a little preview before the video comes out. But yeah, guys, that's essentially how I go through projecting a stock price and where it goes over the next 3 to 5 years. I like to do conservative price projections, so you're always keeping that margin of safety. I like to, it's very important to actually understand the business, understand what's going on. What are the risks? What could possibly increase revenue and net income growth over the next couple of years? What could possibly decrease revenue and net income growth over the next couple of years? And yeah, just like having an understanding of the business, the fundamentals, the financials, the valuations, where it typically trades at, where you think it's going to trade in the future. Like, those are all key things that you need to research before you run your projections. Like, you can't just pick a random stock and start running projections. Like, I guess you could based on you could based on analyst expectations and then industry averages and the company averages, but it's not gonna be relative to what's actually going on in the business, what is expected to come in the future, things like that. So that's the video for today, guys. I'm gonna try to upload this as soon as I can. If you have any questions, I'm always open. Feel free to tag me in the questions and help channel, and I will do my best to get back to those as soon as I can. All right, guys. Thank you very much for tuning into this video. I hope it was very helpful, and I will see you guys in the Discord. Peace.